This is the Value Investor Podcast with Tracy Reinick. All things value, all the time. Listeners of today's program might have an interest in value stocks similar to those Tracy shared today. If you'd like access to her Value Investor Portfolio Service, which includes real-time buys and sells, market insights and commentary, visit www.zacks.com/valueinvestor or call toll-free 1-888-775-8348 between 10 a.m. and 6 p.m. Monday through Friday. Outside the U.S., call 1-312-265-9309. Again, that's www.zacks.com/valueinvestor or toll-free 1-888-775-8348. Outside the U.S., 1-312-265-9309.
Welcome back, value investors. Believe it or not, this last week in September was the busiest week for IPOs this year. There's just been an awful IPO market. And so there was a couple companies that went public. That's more than we've seen so far. And one of them caught my eye. It was a cosmetics company called Elf Beauty. Elf has nothing to do with like the holidays or holiday elves or anything like that, but it stands for eyes, lips, and face. So if there's any women listening today, you might know this cosmetics line because they are at discount retailers like Target and Walmart. They got their little Elf packaging. They start their products at about $1, and then you go up in price, but not so that it's expensive. So for instance, you could buy like a whole eyeshadow palette for only $10 versus the $20 to $40 you would pay at like an Ulta or Sephora for a more expensive line of cosmetics. They were trying to raise $100 million in the IPO, but it did price above expectations. And so they ended up raising $141 million, but the shares were up 56% on their first day of trading. So there was a lot of excitement around it. There always is on these IPOs, but it got me thinking, can value investors buy IPOs too? Is that an area any value investor can go into? Because we all want to be in there. And I know you all want the answer to be yes. I want the answer to be yes because it's so exciting. And you read all these articles about IPOs and, you see 10 years later, oh, if only I had bought the IPO in whatever stock it is, Google, I would be up 12,000%. And so you think you have to be in the IPOs. But they're never cheap out of the gate. Speaking of Google, I definitely remember when that one went IPO. And they were expensive if you just looked at the fundamentals, not on the share price, but on the fundamentals. And I just couldn't do it. It was trading at like 40 times its earnings or something at the time. And as a value investor, I just said no. I was hoping it would go cheaper, a couple days or weeks or months after the IPO, and I would get it a lot cheaper. It would be more in a value range. But with that one, that never happened. But that is one of the ways you can get into an IPO, but not when it first launches. So you, as a value investor, are used to being patient and waiting for the right price. So on some of these IPOs, I kind of looked around to see on more recent ones, if I had been patient, could I get into them, say like a year later, maybe 2 years later? And still on some of them, some of the glamour ones, the answer was still no. Like for instance, Alibaba, that was trading very expensive when it launched. It was like the mania. We even did a live broadcast here when that one went IPO. It was the largest IPO in history at the time. And then the shares really sold off. About a year ago, they were way under the IPO price, but even still, they were trading at like 30 times their forward earnings. And even with the big earnings growth and all of that, the shares were still expensive. They've rebounded pretty dramatically off those lows from a year ago, and now they're trading at 50 times. So something like that, it looks like you're going to still have to be patient if you're willing to get into that now older IPO. Another company that I saw that has really pulled back is GoPro, but that one, has its issues. It's got fundamental issues that as a value investor you might not want to be in, with future growth and where their earnings are going to come from, things like that. So I'm not really sure that that's an area that, value investors want to be in either. So I kind of ruled that one out. So it doesn't hurt to be patient and wait around. I know a lot of people in the restaurant sector, because that was a hot IPO area not too long ago. A lot of those have pulled back. I've been waiting kind of on some of the restaurants, like Potbelly's. It really sold off, but it still never got to what I consider to be a value stock. It was still trading around 18 to 20 times, but I'm keeping my eye on it. And then Shake Shack is another fan favorite. That stock has really been cut in half from its highs. But again, just like Alibaba, it's still not cheap here. So I'm still kind of watching that. But as I said, value investors, we have a habit of being patient, and we can wait for it to get out of favor and for the fundamentals to match up, because there's no real reason to rush into these, even though everybody says, oh, you have to be in the IPOs. You have to be in there the day they launch or the week they launch or else. But that's not really the case. But if you do want to be in them kind of right away or within a couple months of the launching, there are a couple ETFs that I myself have looked around at, and I used to own one of these, which is a way to get into IPOs with a little bit better fundamentals, I would say, because they hold so many different IPOs in the ETF that it gives you a little bit more diversity, and you're not simply paying for all of the overpriced IPOs. You're getting basically everything. So the first one I'm going to talk about is called Renaissance IPO ETF, and it has a real easy to remember ticker. That ticker is IPO. This one was started in October 2013, but this is the smallest of the two. It has almost no assets. It only has 12 million in assets, which isn't that great. But its number one holding is Alibaba with 11%. But then it has a couple of banks. It has Citizens Financial Group is number 2, and then Synchrony Financial. And then you have Mobilize, and they're number 4. So combined, those three are making up almost 50% of the portfolio. Well, maybe like 40 to 50%. So you're going to get a lot more banks. That might be surprising to you, like what goes IPO. A lot of the focus is on these companies like Alibaba or Facebook or those, or even Elf from this week. But nobody really talks about some of these other, quote unquote, boring companies that go IPO. Sometimes those aren't bad to own and would have possibly better value fundamentals. So it's something to look at. But like I said, this one IPO has 12 million in assets, so it's a little thinly traded for me. So I personally liked and used to own the second ETF here, which is called First Trust US IPO, and their ticker is FPX. They have about $580 million in assets. So as you can see, quite a bit bigger. They also are a little bit different. They do IPOs and they also do spin-offs. So, which is like an IPO, but it's a little bit different. So that would be like Hewlett Packard Enterprises or companies that, break apart into two and, so shareholders get portions of both. I kind of like the spinoffs. There's been a lot of articles about the success of spinoff companies. I should really do a podcast just on those, because those are interesting to value investors a lot of times. You can find values in those kinds of spinoffs because they get ignored too. They're usually not real glamorous. It's like someone, there was Manitowoc up in Wisconsin, and they were a crane company, but they also have this food service segment. And that they don't really go together. Why do you have cranes in this food service stuff? So a lot of people are putting pressure on them, like, spin one off. So they finally did. And so now they've broken up into two, but that doesn't really make the news because, does anyone care that they spun off their food service when you have these more glamorous, like, first time to the market IPOs? But that is where, again, you can find some value. So this fund has those spinoffs in there, which I like. And this one also owns the IPOs a lot longer than the IPO ETF, the Renaissance. You may or may not like that, because I was kind of surprised at the top 3 holdings in this one, to be honest, because I haven't looked at it in a while. But number 1 is Kraft Heinz. It's about 10% of the portfolio. And then you have number 2 is AbbVie. They were a spinoff, actually. I think Abbott Labs or somebody spun them off. And that's 10% as well, just a little bit under. And then number 3 is Facebook. And I kind of looked at this and was like, Facebook, they've been around forever. And I had to look up when their IPO was, and it was on May 12th, 2012. So that's been in there over 4 years. I forget what their holding is, but it's got to be near the end of the holding period for this fund, because they're only supposed to hold the IPOs for a certain length of time. I think it was like 3 to 4 years or something. So soon the Facebook will, that will be out of there. Actually, AbbVie is also old. I didn't look up its exact IPO date, but that's not a new one either. So these are things to look at. I definitely recommend going in and looking at the holdings that are in there, and looking also at the IPO market, what will be coming on down the pike, because this year, like I said, has been horrible. So there hasn't been many that they could even add into these funds. So kind of a little bit out of favor, but that's why we as value investors like them. So again, I hate to tell you, but you can't really buy the IPOs on the initial launch, unless maybe it's a spinoff. That's an option, possibly. But I'll leave that for another podcast, because I do find those spinoffs to be interesting. But, so there's no buying of Elf, not yet. You got to be watching that one. And also watch some of these others if you're willing to get into those when they have a bigger pullback, like Alibaba or Shake Shack or some of the restaurant stocks. But the other 2 ETFs, again, are IPO and FPX. So that's just a little bit of information on IPOs for value investors. And be sure to check out our other podcasts. I've done quite a few now on different value topics, including just like how to find value stocks and good performing value stocks now. I really like the one I did on a value stocks near or hitting new 52-week highs. It's interesting to get a value stock with momentum. So be sure to listen to that podcast. And next week I'll have another podcast on an interesting value topic. So I'll see you then.